Hey guys, welcome back to the channel. My name is Ryan Mayo. I make videos about politics, economics, finance, and stocks. Today's video is going to be about the red day in the stock market that we had. I'm going to update you guys on the latest stimulus. Is there going to be a stimulus package before the end of the year? Yes or no? What's going into that? And then I'm also going to have some swing picks for early 2021, some sleeper stocks that not everyone are talking about that I think are going to be home runs in the long term. So let's get started. First and foremost, it was a down day in the market. Market was red across the board. A lot of tech companies were taking hits. Not unsurprising, not uncommon, nothing you guys should worry about necessarily, at least not yet. We're getting towards the time of the year in the market where things head downward, where volatility heads up, and where people look to reposition their portfolios, take their money out of risky positions or out of positions where they've made profits and pull them and reallocate looking into next year. So a couple things to know. Next week is going to be what they call the quadruple witching day, which is an official kind of beginning of volatility in the market when anything goes and when it's very hard to make predictions on where the market may go up or down. The good news about market volatility is that unlike the typical economy, unlike Main Street, as it were, doom and gloom has just simply not hit the stock market, especially this year, as hard as it's been predicted. Things could be a lot worse than they have been, but with that said, that also means that a lot of stocks, especially in the tech industry, are overvalued. They're too hot, they're too high. So my best recommendation is to keep an eye on that. If some of these stocks start to dip, give it a little time, see if it'll come down. Maybe it'll meet your price target, start to average down, start to get to a lower baseline of the stocks that you have a long-term plan on that you believe in. If I believe in a stock and I see it going down, well, that's an opportunity to bring down my average cost in that stock and increase my potential profits when that stock hits as I believe it will hit. And I recommend you guys do that as well. The other major thing happening next Friday, the 18th, is the deadline for Congress to pass more stimulus. So much of what's going to happen at the end of the year and what's going to happen in the first quarter of 2021 is really dependent on stimulus because the economy is hanging by a thread in many estimations. Unemployment's very high, homelessness, food insecurity very high, despite the stock market overperforming and not seemingly caring about those issues are going to come to a head, and the stock market's been performing under the assumption that there was going to be more help, and there may not be. So as we stand, they're discussing 900 billion to $1 trillion of package, and really the devil's in the details, but between what the Democrats want and what the Republicans want. The Democrats want more money for people. They want more money for states and local municipalities that have been decimated by the lockdowns. They're going into debt. They can't print money like the federal government. States can't. Cities can't. So they can't just step out of debt in the same way that the United States government can just step out of debt and not worry about it as they do. So that's a problem. They want more direct payments, of course, to the unemployed and also just to Americans in general. They want to stimulate the economy through direct cash flow to the American people, whereas Republicans are looking more to protect big business. They're looking for protections for corporations. So if I'm a big corporation, I hire you, I force you back into work, you end up getting COVID, some medical issues happen, I can't be held responsible for that. It is what it is. So that's kind of the pressure that the two sides are having. And also the GOP wants smaller numbers. They really do genuinely believe that higher unemployment benefits, that higher stimulus keeps people who may be in the workforce from getting into the workforce, which Democrats may argue that's the point. There's a pandemic. We need to keep people at home. We need to eradicate this pandemic so that we can go back to normal and we don't just keep doing this over and over and over again as cases explode across the country, which is what's happening right now. So you can see both sides of the argument. I did in my business in the automotive industry, I did see some indication that there were some folks who got the unemployment benefits, got some of the COVID benefits, and it kept them from doing or from hopping back into the workforce and doing jobs, especially frontline jobs where you're around a lot of people. And that kind of prevented him from doing that. For me, at the end of the day, there is light at the end of the tunnel because we know we have vaccines. We know we're pretty confident they work. Of course, I'm waiting for raw data to come out on most of these within the next week or so we can really evaluate what's happening. I think one thing I was reading about in reports today is that there are definitely side effects to these vaccines that you want to be aware of. They're not much different from the flu. They might be slightly more severe, body aches. Basically, you just feel like crap for a couple days. And I'll trade that for not getting COVID, and especially the long-term effects of some of the folks that I know who've gotten COVID and still haven't fully recovered. So that's something to take into account as well. The other thing that's regarding the stimulus is at the end of the day, the good news is that the Biden administration, at least the incoming Biden administration, President-elect Joe Biden, he's interested in stimulus. He's putting a lot of pressure on Nancy Pelosi and House Democrats to compromise, to pass a bill, to not try to get everything you want, and to just go forward with what you can get from the Republican side. And he calls it a down payment. He's saying, get the down payment in. I'm going to come in, take office, and then we're going to be able to pass some more legislation. Now, some House Democrats are pushing back and saying, well, we have leverage right now. Why would you expect that Republicans are going to work with you, especially if we don't win those Senate runoff seats in Georgia, that we're ever going to be able to pass another stimulus again? And if you look at, the history, the last time there was a Democratic president in office, you got to say they have a point. Mitch McConnell and the Republicans are not always so excited or so motivated to work with Democrats, and their voters don't punish them, even though they themselves also need stimulus. They don't really punish them for not working with Democrats. In fact, they reward them and they punish them when they do try to cross the aisle in a way that Democratic voters don't. Democratic voters tend to be more pragmatic. They're used to needing both sides to pass things. They're not used to having huge majorities in government. And I think you can see that tension coming together. So, to kind of give a synopsis to this, do I expect a stimulus package before the end of the year? Unfortunately, if I had to guess, I'd say no, but I do really hope I'm wrong on this. I hope they're able to get something done because there are so many families, there's so much food insecurity out there, and this, as an investor, will really help the stock market. The more stimulus they pump into the market, the better stocks will do, the better run things will make, because that government spending is making up for consumer spending that isn't happening because so many people have lost their jobs through no fault of their own, just because of what's going on with the medical situation across the country. All right, so now the great stuff. Swing plays for this week. I got a couple stocks that not everybody's talking about that can slide under the radar, and these are stocks that I believe are poised to do well in 2021. These are both short-term and long-term swing trades, and what that means is you get into the trade, it swings up, then you pull your profits and you get out, or you pull most of your profits out, and then you can make a determination if this is a long-term deal for you, a long-term play. So one thing I do want to say about these is I want to introduce you to these opportunities, and I want you guys to go ahead and look into them. Take a look at and see if it's right for your portfolio. Everyone's strategy is different, and you have to decide what to buy into based on what makes sense for what your goals are, right? So the first stock I want to look at is called Clean Spark. Ticker symbol is CLSK. This is currently trading at $12.85. This has made a run recently in the market. The price target on this stock is about $20, and I think that this is a really solid play for us to consider getting into. And towards 2021 first quarter, second quarter, it should be around that $20 mark, and then you can reassess, pull profits, see what you want to do with that. The next stock I want to talk about is going to be Curis. Ticker symbol CRIS, Chris, without an H, and that is trading at $7.21, and that is a company in the biotech industry, and it is poised to skyrocket in 2021. I think this is a really solid play, and it's a low risk play because the cost of entry is so low, right? $7.21, no big deal. Those types of stocks don't tend to be incredibly volatile. They move up in a very predetermined way. They move up very methodically, and they also move down very methodically. So if the play is not going right, you have time to get out before everything, the bottom's falling out from under you. And I like plays like that because it gives you a lower margin for error. And the final stock I want to talk about is Foley. This is ticker symbol BFT. It has a current trading price of $13.33 as of this video. This is a company that is looking to rival PayPal. It's looking to rival Square in the merchant banking industry. So, Square, PayPal, they're looking to start competing with American Express, with all these institutions, and Foley's kind of the new player on the street, and they're going to be trying to get into the game as well. And I think this is another good low-cost play that you can add to your portfolio. It can swing up, you can make a quick buck, and you can get out, or you can stay in if you think they've established themselves and they're ready to go to the next level. Right? So I just want to do this quick video for you guys with some of my plays, some updates on what's going on with the stimulus package. Fingers crossed, let's get something done for the American people. And of course, as always, have strength in your psychology. Don't let the red days get you down, right? When other people are running, you should be gunning for your right play, for your right stock that makes sense for you in the companies that you believe in. Average down, make sure your costs are right so that when it pops, you make the money that you're supposed to. My name is Ryan Mayo. Once again, I really appreciate the time. If you liked the video, smash that like button. And if you would like to see more, please feel free to consider subscribing. Till next time.